Hey everyone, I am hashtag tallest man in real estate here in San Francisco. I've got some pretty interesting news and some awesome charts for everybody about what's happening locally as well as in the Bay Area and nationally in the real estate world. Obviously, big thing today. Silicon Valley Bank went under. That is going to have huge ramifications. I feel like in the Bay Area economy, you're going to have a lot of startups now that aren't going to be able to have access to liquidity to pay their employees. And so you will see as some of these startups, I think, start to fail over the next, several months here. And especially, obviously, everything that's going on with interest rates that really hurts smaller companies. What I always tell people, too, is when a big event like this happens, a lot of people will start reaching out and saying, "Oh, is there going to be a big crash coming?" And when you think about it, it takes a long. If somebody literally got laid off today, and they're going to look for a job and most likely find one and still keep their home, and it's no different if you're paying rent, but obviously there will be some people, but that takes so long to take effect. And then even if they decide to sell their home, they have to contact me. I have to get that home fixed. It takes time to prep. Then we got to sell it. Then I get the money. So you're looking at a long time if it really does have an impact at all. So that's the first thing I want to talk about, and I just feel really bad for all the employees that this is going to hit hard for them, and so you never want to see that. But one of the topics I want to talk to you about today was my CEO Robert Reffkin was in town last week, and he was at one of our meetings and had some really interesting stats that I did not know. So one of them, as you can see here, is nationally prices are up 6%. We're seeing in San Francisco, we're seeing open house traffic actually increase quite a bit. And he was saying they're seeing that nationally. He also on CNBC, I think it was maybe a few weeks ago, was on CNBC, and he thought that Q4 was the bottom of the real estate market and that Q1 is probably the last great time for buyers. We'll see how, this is obviously fluid, especially if banks start crumbling. That's going to obviously change things as well. And this I thought was really interesting was these mortgage stats down here. 30% of all homeowners are under a 3% rate, and 85% are below a 5% rate. That really surprised me. And so, you hear of other stats in San Francisco that were down, 20% in prices. There's some more stats I'm going to have coming up that talks about how many transactions were down and people thinking that, there's going to be a big crash. But there's still the supply and demand aspect of real estate. Yeah, you may not have as many, homes out there and people wanting to actually sell them, but, buyers out there as well have been looking for a good deal. And so our chief economist also was on that call as well. And he said that the lowest number of listings we've had in 18 years. And this is what honestly I did not know about before I got into the industry, is when you have the lowest amount of listings, that doesn't mean that home prices are crashing. If anything, that can make them stabilize or possibly go up. Now, home prices have gone down considerably over the last year. Depending on the part or the neighborhood in San Francisco you're in, you're looking at 10 to 20% down, which is one of the worst actually in the country. But we will be the first to come back up in home prices. But that doesn't necessarily mean that the whole thing is crashing down or anything like that. And also purchases are down 40% year over year. Now that is big for me and all the realtors out there. That means there's basically 40% less deals out there. There's only 100 homes sold in all of January, 100 transactions, and that's not a lot when you have 4,500 realtors competing for that. So you will see a lot of realtors over the next year, unfortunately, probably leave the industry. That was another stat actually Robert talked about was 7% of the industry has left, and that's about 100,000 realtors according to him. So we'll start seeing that, which is an opportunity for me and Compass to grab more market share. So don't want to see people leave the industry, but I'm also kind of looking forward to it. And this is also interesting too. It's the first time our chief economist has seen the 3-month rolling average decline in all of the Bay Area counties at the same time. In the past, all last year I saw San Francisco leading the way, but then you would have other pockets like Marin and Napa Valley actually doing okay, especially compared to San Francisco. So I thought that was a really interesting stat. Now let's get into the whole about San Francisco in general and the appreciation rate since 1990. This is a chart I just love showing my clients. Let me zoom this up for you as well. Yeah. So as you can see here, what I find so interesting is look at the appreciation gain you've had basically over the last 30, 35 years. And I hear people saying they're waiting for a crash. Well, let's look at this. Even when you look at the foreclosure crash, a great recession that we had, you had 8% one year, another 12, another 7%. But then really in basically 2 years right after that, you made it all back and then some. And then we consistently had appreciation over forever. So, what I always tell people is when it's right for you is when your finances, your future, and your family all align. And when you can kind of see what's going to happen over the next 5 years, that's when you end up buying real estate. So don't try to time the market. Um, so let's pull up the next chart as well. And this I want to show you is the price trends actually in San Francisco for homes. As you'll see, there's just a dramatic move up. And, you know, no duh, basically you print a bunch of money, home prices are going to go up. And when you look at where we're at right now, they're going to start the money printer again. I think this chart actually will be even more exaggerated over the next 10 years. You've got a lot of baby boomers that are going to be selling to the biggest generation, the millennials. They're going to have to keep printing money, like more than we've ever done. This money printer is just going to keep going. We can never actually pay back our debt, so we're just going to have to keep printing. And if you keep printing, home prices and assets go up. Long story short. But here's what that looks like on the 3-month rolling average. And then you can see this big drop that we've had here. But I would say, honestly, the last year was, in 2020 was just insane. And 2021 was as well for home appreciation. That's not normal. So I feel like we're just kind of getting back to what would be, kind of normal pricing, should I say. But that's a good opportunities for buyers out there. Also, here's the 3-month condos. Now, this is what a lot of people don't know. Is I talked to them about owning a home versus a condo. If you look, home prices for condos pretty much have been the same over the last 5 years. Versus you go back to the home appreciation, look how big this drop is or extension has been. I mean, let's look. In 2015, you were basically, a little over $1 million, and then you got to as high as $2 million as the average. So just in 5 years, you're doubling. That's insane. Condos have been pretty much flat. You had this big boom here after the .com. When everybody was moving here, they all bought condos, and then it's been pretty flat for the last 5 years. So, I had a $2 million buyer, and I was saying, look, if you got a $2 million home, and you look at what you would have paid in 2015 versus the condo, you're going to basically be paying, you're probably going to make about $75,000 to $100,000 a year easily in appreciation. Versus a condo the last 5 years, not really anything. So something to think about. And then also, I love this chart in terms of the macro when you're looking at all of the Bay Area. So what I love here is it's got all the different counties, and you can just see the explosion that we've had in terms of price appreciation. I do think that prices are either at the bottom or may continue to slide a little bit, especially with everything that's happening with the banks. Something will break. The Fed basically said we're going to do that, and then the money printer is going to start. And when the money printer starts, interest rates go down, and it's going to get crazy again. So that's a good time, I think, for buyers to possibly get in. If you're a seller, depending on your situation, maybe you want to wait a year or two. But some of my CEOs said too, which I really liked, is he's like, look, life events keep happening for people. People are still going to have babies. They're still going to get married. I'm getting married here in a little while, and we're thinking about having kids as well. But then you look at that interest rate, if you got a 3, 4, 5% interest rate, even if you had that second kid, you're like, you know what, maybe they can share a room for a couple years until the interest rates go down. I'm not going to double my payment just for that extra room. So and when that happens, which is when everyone does that, then there's no transactions happening, no sales going on. Everything kind of stays the same, if not goes up. And so it really sucks for us realtors in terms of doing transactions and Compass also. But in terms of buyers and things like that, expecting some huge, price depreciation like 50%, I just ain't gonna happen. And then the other thing too is now I'm talking about nationally, is 50% of all homeowners have less than 50% equity. So it's not like 2007, 2008 when everybody was tapped out and only had like 5% equity. So very different times now. If there's anything you need from me, let me know. As you can see, I'm hashtag tallest man in real estate. Would love to talk to you. Bye bye.